Hello. I'm Casey Wagner. I cover policy and regulation at Blockworks. I'm very excited for this panel. We are going to be talking about digital asset innovation in global banking. I have Keerthi, who is the head of products at Connexus Digital Assets at JP Morgan. And I have Biser, who is the head of digital asset technology at Citibank. Thank you, guys.
Thanks for having us.
So when they told me I was doing this panel on crypto, banking, the first place my mind went was tokenization. I feel like that's a huge topic, not only at this conference, but really in crypto. I know the last panel was talking about it as well. Keerthi, maybe we can start with you. Can you kind of give us like a general overview of how traditional banks are thinking about tokenization right now, both in terms of traditional assets, but also more alternative assets?
Yeah, for sure. So I think, even outside of like our bank, I think in general, when people think about tokenization, they think about three things. The first is efficiency. So how can we make it more efficient for assets to move from like one party to the next? The second is utility. So once you have a more efficient system, what can you actually like use those assets for? And I think the third, which we've definitely seen more in the public space and less so in our own efforts, is about distribution. So once you make it more easy to move things from one place to the next, and you make it more useful, or you introduce utilities that you didn't necessarily have before, can you access a broader reach of potential clients and investors? So from the JP Morgan perspective, as I mentioned, we've definitely focused our efforts around the first two. So taking a look at our different business lines and understanding where are their problem statements for which implementation of the technology could really allow us to create more efficient settlement systems. So for instance, one of the applications that we have live on our platform that we've had live for the last 4 years, I think it's nearing around 2 trillion in total volume traded, has been entirely around the concept of tokenizing traditional assets. So think of your treasuries, your mortgage-backed securities, other sort of like fixed income assets, and enabling our clients to use that to access intraday lending, which otherwise in the traditional ecosystems might be a little bit harder to coordinate and orchestrate. We've since expanded to other forms of utilities, so for instance, tokenizing money market funds and using those funds as collateral. As we continue to think about tokenization, it really comes down to those first two themes, right? Of looking across all of the different asset classes that we serve, where are there efficiencies that we can introduce, and then what sort of new markets and new products can we create on top of that?
And I love that you mentioned infrastructure. I definitely want to get into that. But Biser, I'm curious to hear your take on the current landscape of tokenization, what you guys are working on.
So first, thanks for having me. And tokenization is a big topic for us as well. It's on top of all the benefits that Keerthi mentioned. We see it as an enablement for efficiency in creating different forms of traditional assets and representing them on the blockchain. And safe to say that tokenization is probably the first product market fit usage of a blockchain rails, because we can automate through smart contracts, through different primitives, we can automate actions, activities on tokenized assets and drive benefits from representing them on the same ledger, on the single ledger, with sufficient efficiency, with sufficient auditability, with all the benefits that blockchains and digital assets bring. So what we're excited about, and we've been publicly announced in the last few years, is Citi Token Services for Cash. That's a tokenized deposit solution where we tokenize Citi commercial bank money, and we seamlessly move within Citi branches that are onboarded onto this network. Additionally, we are thinking about tokenizing different types of agreements. So think of it as within the trade finance use cases around IOUs and letters of credit, bill of exchange. So this type of like codified smart contracts where you tokenize an agreement, a promise to pay, on the delivery of specific goods or specific agreements. So that's a separate angle of tokenizing money, payments, assets, but also tokenizing agreements, which are traditionally paper-based solutions. So we can drive efficiency from the fast rail, the 24/7 on-chain rail, but having smart contracts with them to actually seamlessly settle, execute. It's a if this then statements of moving promises and agreements and settling on the same ledger.
Yeah, definitely. I like that you both mentioned tokenization as a way to improve efficiency. You both mentioned some really interesting utility cases. I'm curious, kind of moving beyond tokenization of traditional assets. Keerthi, you mentioned alternative assets and kind of moving into that space. I'm not sure how much you can share about what JP Morgan is working on specifically, but I am curious what you can share about the banking system thinking about tokenizing these alternative assets.
Yeah, for sure. I mean, I think the focus, like you can probably hear it from what both Biser and I have said, like the focus, and what you can also Google and see that the industries are doing. The focus for the last few years has definitely been around bringing the more traditional, more liquid assets on chain, because you need forms of on-chain cash, you need forms of like high quality liquid assets on chain in order to get people comfortable with having an asset for which they'd use to purchase maybe more complex or alternative assets, and be able to drive efficiencies on the settlement layer for those assets by having that form of on-chain cash that allows for DVP. So it's definitely been, I think from like going back like a few years, I think the first types of tokenization use cases that this industry actually tried were all around alternative assets, and the thought way back when was like, okay, if you can make it easier for someone to like settle the thing, does that make more people want to buy it? And we very quickly realized that that wasn't necessarily the case with like buildings or private equity funds or whatever. But now that we are starting to have a few more of these like, I guess like primitives, either stablecoins, deposit tokens, or other forms of on-chain cash, or tokenized funds on-chain that are getting people a little bit more comfortable with the infrastructure and comfortable with sort of like how to interact with the technology. I think we, along with our peers, can start to think about like what are those more complex asset classes, and maybe take a slightly different approach this time in terms of how we'd think about tokenization, right? Like, is it around just tokenizing the thing and saying people will come, or is it actually around finding the access points, making the lives of like an access point or a distributor a lot easier, and through the use of tokenization, and then therefore driving more sort of like interest in the asset classes.
Just to add on the topic, we've done experiments in the past with different types of smart contracts, different types of assets, but essentially focusing on creating, let's say, money market fund or basket of securities within tests that we have experimented with different ledgers, with different networks, but essentially rethinking how we could be utilizing the promise of the smart contracts and adding metadata to it. So, for example, the added benefit of this ledger is that you can have also decentralized IDs on the same ledger. You can have privacy-preserving techniques like zero-knowledge proof on the same ledger. So this way you can codify, for example, the accredited investor certification within his wallet, so he instantly would be able to buy a money market fund or specific security without having a separate KYC check. So this type of thinking, this type of efficiency can drive a lot of simplification, reduce errors, reduce risk, and overall make the ecosystem healthier. But something I would like to cautious on as we are thinking of what kind of assets we should or could be tokenized. I know a lot of industry media have come up with numbers around what is the target addressable market for tokenization, and you can see different numbers, but I'm not sure if everything that could be tokenized would be tokenized, because as Keerthi said, even if you tokenize it, is there sufficient demand for it? if there is sufficient liquidity, who would buy it? Just because it's on a blockchain, does it make it more interesting? So outside of driving the efficiency, reducing risk, and making the whole process for issuers, authorized participants, settlement agents, the whole life cycle more efficient. But that's one of the biggest questions that we need to answer in the next months, years, is how far are we stretched into the tokenization concept?
No, I love that. Just because you can doesn't necessarily mean you should or people want you to. I think crypto has definitely seen that in tokenization specifically. Like you said, some of these products just don't have demand. You also mentioned zero knowledge proofs, though, and I want to go back to that. In terms of privacy solutions, digital IDs, et cetera, I know that privacy and security is obviously a top concern for institutions. I think it is for the retail and investor side as well. How can those kind of solutions be scaled? How are you thinking about them? What can you share?
So yes, within the city we have a global center of excellence, with specific mission of understanding and creating and working with the industry of solidifying the best practices around token standards, but also data privacy, and what the specific levels and shades of data privacy we need to have in place. So for us, as you rightfully said, privacy is paramount, and we need to feel comfortable with the degrees of privacy that we have. So we've been exploring and we've been thinking about different privacy solutions, FHA, zero knowledge proofs. So, and I'm very excited for the next topics. I know it's around zero knowledge as well, so I definitely would listen to it. But it's for us, it's something that we want to definitely experiment. We want to try, test. It will be the same crawl, walk, run approach of like testing, but the important piece is how much privacy you need without breaking composability, without breaking interoperability. And just because you can, let's say, quote unquote, encrypt paywalls, encrypt assets and everything, will smart contracts still operate? So I know there's a lot of innovation with zkVMs, with frameworks around zero knowledge proof from partners that we already have now, and we are very excited to be working with them. So it's this type of momentum where there is an external innovation happening, and we as a bank, we are understanding what is the right degree and how to properly use it.
Yeah, I was gonna say, our team gets very excited about the sort of like promise of digital identity and on-chain privacy, so much so that like last November we released a project called Project Epic, which was enterprise privacy identity without forsaking composability. And I think there's like, you know, to the point that Biser's making, a couple of reasons as to why. For most of our clients and for most individuals in the banking system, like privacy is a non-negotiable, or at least it has been for all these years. And so when we think about scale, right, and when we think about sort of like the efficiencies that we want to introduce through tokenization, not just for the sort of like subset of the world that is comfortable interacting on like existing networks without sort of forms of on-chain privacy, but also those that we want to like bring into those ecosystems to also partake in the benefits. We need to think about like meeting those clients and meeting those people like where they're at when it comes to their expectations for privacy. So a lot of the advancements that have taken place in the zero knowledge space have definitely, you know, given us a lot of excitement and confidence that the sort of like innovation that we continue to push and drive and create businesses around are ones that can head into a direction where, you know, for certain use cases, maybe you're totally comfortable and fine operating in a public state. But for those where you're not, you have the optionality and the flexibility to like tap into those privacy sources. And same thing for digital identity, right? Like I think even more so than with sort of like the privacy conditions or parameters for assets. I think identity is one of those things where we're like, from day one, we want to make sure that if we're to issue out attestations to our clients' identities, or if we're to issue out tokens that represent identities. Those clients, those investors, those entities that we interact with aren't forsaking sort of the privacy around their being just to interact with an asset in a more efficient and effective manner. So definitely excited about, even just this week, like some of the things that have been announced in the space around sort of the constructs of like verification and bringing that into DeFi. It's like one of those things that we've been thinking about since like 2022, I want to say. And sort of our efforts to continue coupling, the research and not just at research at this point, actually, like tangible progress that's being made. Not that research isn't tangible progress, but the work that's happening in the privacy ecosystem with the work that we've done previously in digital identity and in privacy preserving assets, we think will open us up to a lot more from a scale perspective.
Just want to add something. It's very important that we, as a financial institutions, test and dip our toes with the technology and trial and test. But more importantly, I think the whole ecosystem needs to lift, as we say, the tide lifts all the boats, because it's not just few institutions making an effort. The whole enablement needs to happen end to end. So it's asset managers, banks, intermediaries, custodians. These type of solutions involve a plethora of ecosystem players that we all need to get on, and that's the difficulty of it, because there should be sufficient standards in place, sufficient certainty of risk reduction and operability and resiliency, and everybody as counterparts on a transaction needs to be comfortable with this. And that's I've seen in the past few years that folks were testing as we are testing, and but it needs to be a common consensus, no pun intended, to agree on a standard how to do privacy, on how to implement decentralized IDs.
Yeah.
So it would take, I would say, months, maybe years of getting everybody up to the same level of understanding and agreement how to best use it.
Yeah, definitely. Like you only get so far down the path if you can issue just your direct client a credential, but then they're not able to use that anywhere else, right? Like the whole point of the game is like efficiency through reusability for identity credentials, and so Biser and I have to work together.
Well, I mean, going off of that, something that we talked about on the prep call for this was, are public networks mature enough for institutions? And that might be fighting words for some people in this room. But I'm curious how you're thinking about public networks and the maturity level. Do you want to start?
I can start, yeah. So we've seen the evolution of public networks for the last 15 years, starting from 2009 with Bitcoin. But it's interesting, in order for them to be fully enterprise ready, they need to meet specific criteria. And also they need to be into a state of assurance that there's some certain predictability. And the way I think about it is, in the last few years, some networks had that predictability and usually stayed stable, and you would know that if you issue an asset that it won't hard fork and you have two assets on two different networks. But also with the expansion of roll-ups, layer 2s, app chains, and everything else, I'm not sure if it serves the purpose of solidifying the right platform, the right protocol for issuing assets. Because I know it improves scalability, but on the flip side, it's create more fragmented markets, more fragmented order books and liquidity. So I'm not sure if it makes it easier from an institution to have a predictability and assurance that this will be the target state of networks. And we've seen that from the public roadmaps or the lack of public roadmaps that some public networks have. I think there is a gap that needs to be filled of obviously expectations from institutions on one side, and getting semi-comfortable with some risks, or driving the technology and driving the operations and the risk, and on the public side to to give these assurances that yes, the networks are here to stay, they would continue to operate. These are the SLAs, quote unquote. I'm not sure if that's applicable even in the public world, but the SLAs that you can maintain.
Yeah, I know we're at time, so I'll keep it short. I feel like it's a trick question because institutions are already there. So I think really what it comes down to is like the use case and the scale at which an institution wants to be operating on a public chain. I think for us in particular, we've seen really amazing advancements in the space. Biser mentioned a few of them. I think account abstraction, sort of like the flexibility that people have when setting up our wallets and being able to maintain and preserve strong user experiences with strong levels of like flexibility and security is one thing that has given us a lot of excitement around the space. The advancements in ZK, the advancements in digital identity, I think I mentioned the verified pools. All of these are different things that are making us really excited about what the prospects are in the public space. So I think it's just a question of time.
Definitely. Well, thank you so much. I really appreciate your time. And thank you for joining us at the Digital Asset Summit.
Thanks for having us.
Thanks for having us.